CFA Level 1 Practice Questions. Learning Module, Capital Flows, and the FX Market. Topic: the foreign exchange market in exchange rates. A US-based investor observes that the Euro-USD exchange rate, Euro per US dollar, decreases from 0.90 to 0.85. From the investor's perspective, this means the A. US dollar has depreciated against the euro. B. US dollar has appreciated against the euro. C. Euro has depreciated against the US dollar, but the US dollar's value is unchanged. A Japanese investor is given a quote of USD JPY equals 110.50. 1 USD equals 110.50 JPY. From the investor's perspective, what is the indirect exchange rate quote? JPY per USD. A. 110 Japanese yen and 50 sen per 1 US dollar. B. 0.00905 US dollars per 1 Japanese yen. C. 0.00905 Japanese yen per 1 US dollar. The Japanese yen, JPY, has appreciated by 5% against the Australian dollar, AUD. How much has the AUD depreciated against the JPY? A. 5%. B. Less than 5%. C. More than 5%. If the exchange rate between the US dollar, USD, and the Canadian dollar, CAD, increases from 1.2500 to 1.3000 USD per CAD, the US dollar has most likely A. Appreciated by 4.00%. B. Depreciated by 4.00%. C. Appreciated by 3.85%. If the Canadian dollar, CAD, depreciates by 15% against the Swiss franc, CHF, how much has the CHF appreciated against the CAD? A. 15%. B. Less than 15%. C. More than 15%. In the EU or per USD format, the USD is the base currency, the unit being priced, and the EUR is the price currency. A decline in the exchange rate 0.90 to 0.85 means it now requires fewer units of the price currency, EUR, to buy 1 unit of the base currency, USD. When fewer units of a price currency are needed to buy the base currency, USD has strengthened or appreciated. Currency values are relative. An exchange rate is never an absolute value, but the price of one currency relative to another. Because currencies are quoted in pairs, it is impossible for one to depreciate without the other simultaneously appreciating. Therefore, the value of the USD cannot remain unchanged if the euro's value has moved. For the USD to depreciate, the exchange rate would have to increase, e.g., from 0.90 to 1.00. Meaning more euros are required to purchase a single dollar. This is base currency price currency format, BP, reversed from PB, not BP used in market convention. Direct quote expresses how much domestic currency, JPY, is needed to buy 1 unit of foreign currency, USD. Indirect quote expresses how much foreign currency, USD, is needed to buy 1 unit of domestic currency, JPY. Domestic currency is the currency that we hold, regardless of our nationality. Direct quote is when the domestic currency that we hold, is the price currency on the second order on the exchange rate. Standard format used globally, exchange rates are quoted with the base currency first and the price currency, second order, BP. CFA uses the academic convention with the price currency first and the base currency second order. In CFA, always stick to the academic convention, where price currency is on the first order, not the real-world format. When one currency appreciates by a specific percentage, X%, the corresponding depreciation of the second currency is always mathematically smaller than X%. Using the formula 5% divided by 1 plus 0.05, the depreciation is exactly 4.76%, which directly supports the answer that the AUD depreciated by less than 5%. The relationship works in the opposite direction for appreciation. If a currency depreciates by X%, the other appreciates by slightly more than X%. When both sections combined, percentage changes are never equal when switching the base and price currencies. They will always be mathematically different. The exchange rate convention AB defines currency B as the base currency, the unit of one, and currency A as the price currency. Because the rate increased, 1 unit of the base currency, USD now buys more units of the price currency, CAD, which means the USD has appreciated. To find the change, you divide the new rate by the old rate and subtract 1. A positive result, 0.04 or 4%, confirms appreciation of the base currency. For exchange rates quoted as price per base, there is a direct link between the movement of the rate and the value of the base currency. An increase in the exchange rate always indicates that the base currency is strengthening, appreciating, while a decrease indicates it is weakening, depreciating. When a currency depreciates by X%, the corresponding appreciation of the other currency is always more than X%. To find the exact appreciation percentage when depreciation is known, you use the formula. Appreciation percent equals depreciation percent divided by 1 minus depreciation percent. Percentage changes are never identical because they are based on different starting values, the inverse of the original rate. Price versus base currency perspective. Identifying the base. In the CHF-CAD convention, where CAD is the price currency, the CHF is the base currency. If the price currency, CAD, depreciates, the exchange rate value must increase because it now takes more CAD to buy 1 unit of the base currency, CHF. Whether calculating via percentage formulas or by using hypothetical spot rates, the result consistently shows that a 15% drop in one currency necessitates a 17.647% rise in the other to maintain the relative price balance.